Investing in the stock market for beginners. If you're one of those people who've been wanting to invest in the stock market but you don't know where to start, this video is for you. This is a video I wish I had access to in 2010 before I lost my life savings on single stocks. I wish I'd had it in 2001 as an 18-year-old just starting out. Then I would have benefited from over 20 years of compound interest. And if you know the magic of compound interest, you're gonna want to invest as soon as possible. Compound interest is a big deal. Today's video will explain where to start in the stock market in the safest way possible so you can start benefiting from compound interest, and the sooner you get into the stock market, the better. You've got to do your own research before making any investment. It's essential to first do your research. You can start by reading books, watching videos, and attending seminars or any other form of networking. You might have heard of the common investing saying of your network is your net worth, and I believe this to be true. Learn the basics of investing in the stock market, including the terminology, different investment strategies, and much more. Think and Grow Rich is a good place to start. Napoleon Hill's classic book will help you with investing and personal development. A little hack I've found over the years when doing your research is to think about speed. Try speed reading, for example, or try reading a Blink, which is basically a book condensed into a 15-minute read. You can get Think and Grow Rich and many other investing books. If you just want the main points, a Blink's for you. Or you could listen to an investing podcast on 1/2 speed or even 2 speed and get that info in your head as quickly as possible. The more you learn about the stock market, your financial literacy will improve and you will have a greater chance of succeeding as an investor. As I've mentioned a few times on this YouTube channel, it's easy to get sucked in and lose your money in the stock market. You hear about the latest stock from your workmates or even your friends, your family, and you FOMO in without doing any research. This isn't safe. It isn't good for your mental health neither, and I don't really recommend it. When you read the books on investing in the stock market, the experts recommend index investing for beginners. This is where to start. This is less risky than single stocks because you have multiple stocks within your fund. ETFs and mutual funds are similar, but we're going to keep things simple and stick with low cost index funds. This is because it's what my research led me to in 2019, and it's my favourite way to invest by far. Depending on what fund you have, you can have stocks from different countries, different markets like the S&P 500 or the FTSE 100 in the UK, different sectors all in one fund, and you can have a mix of stocks and bonds, for example, meaning you benefit from diversification, basically spreading your investments around so that your exposure to any one type of asset is limited. It reduces risk or volatility by investing in a variety of assets. My Vanguard low cost index fund contains thousands of companies, so I have diversification and much less risk than when I steamed into single stocks back in 2010. When I first started hearing about index investing in 2018, keeping costs and taxes low was a common theme and something we're going to be covering in greater detail. You can do the research yourself and go with the DIY do-it-yourself approach to index investing, or you can go and speak to a financial advisor. The financial advisor is going to help you determine your risk tolerance and your goals, and this is what you need to know before choosing your index fund. This is suitable for someone who might need the added assurance of speaking to a financial advisor. Just be aware of the costs that come with using a financial advisor. It can be anything from 1% to 2%, and this can eat into your interest earned and can cost you tens of thousands of pounds in fees if you invest long term and build up a good sum of money. Being very aware of the costs in 2019, I decided to become my own financial advisor. To invest in the stock market is a straightforward process once you've done some research and have a basic understanding. Let's look at a step-by-step guide on how to start in the stock market. Read the books and do the research so you learn the fundamentals of investing in the stock market. Ensure you know your risk tolerance. I'm high risk as I intend to invest for the next 20 years. Ensure you know what your financial goals are. Research what platform to use. This is where you put money into and actually buy your funds. Do the research and decide what low cost index fund you want to invest into based on your risk tolerance and your goals. Determine how much money you can invest each month. Set up your direct debit and set and forget. Then it's going to be checking the price of your fund once or maybe twice a year. There you have it, a safe way to invest in the stock market. Before we finish, let's have a little recap. 1. When you fully understand the magic of compound interest, you're going to want to start in the stock market as soon as possible. 2. Do your own research. Before making any investment, it's essential to first do your own research. 3. The more you learn about the stock market, your financial literacy will improve and you're going to have a greater chance of succeeding as an investor. 4. When you read the books on investing in the stock market, the experts recommend index investing for beginners. 5. Be aware of the costs that come with using a financial advisor. It can be anything from 1% to 2%, and this can eat into your interest earned. So that's it for today's video. This is an excellent way to start for beginners. If you want to start in the stock market, look at low-cost index funds or something similar like mutual funds or ETFs. This is safe. It's safer than single stocks and it's stress-free. It's brought calmness to the way I invest. Index investing is by far my favourite way to invest, and I've been doing it for 20 years. So that's it for today's video. If you've liked it, if you've taken something away, a thumbs up would be massively appreciated. And if you've really liked it, comment, let me know what you think. Any comments, any suggestions so I can improve the channel and improve the material so I can help investors.